Welcome to Trading Lounge and the commodities. We'll be covering iron ore, gold, silver, crude, copper, natural gas, and the DXY. So this is iron ore here. You see it up here. This is from the Chinese exchange. This is a monthly chart, just pointing out that we're getting pretty low over here. We are looking for a low. We don't know if we've got one in play just yet, but the stochastics is certainly, becoming oversold at this point. So on the daily chart, let me just remove these. Here we are seeing a lot of volume there as well. We know there's shortage of supply for, copper, iron ore, coal, all of that sort of stuff. Now, as you know, I've had this here as an A wave, a B wave, and 1, 2, 3, 4, 5 for the C wave. My problem is that I've never really could get a comfortable impulse wave out of this wave here, but I've been hopeful, and I've just been hopeful and patient, and I can see that we've got 3 waves down here. Well, it's only 3 waves down unless we need to take out that top there. If the market moves up there, then it confirms it as 3 waves. But otherwise we'll look at this as 1 and 2 here, and then 1 and 2 to the downside, and we'll look at it further. Now, what we can say is, well, obviously any breach below here is bearish at that particular point in time. So we just need to continue to monitor this. There's nothing else we can really do, but I can say that this appears to be corrective in its first instance, and but I'm a little bit hopeful because we've got those 3 waves here, but that top there on that bar that's come down needs to be taken out to the upside to confirm that is 3 waves. That's what it's sort of coming down to at this stage. I'll just go to the tick chart here. We've been looking at this here, this move. This here is, well, I'll get 5 waves out of that, but it certainly looks corrective, doesn't it? That's corrective, that move there. Let's just bring in a bit more data here and a bit more. Let's have a look at the bottom. So this wave 4 here, it's difficult to get 5 waves. I can get them, but I've got to kind of really squeeze it out, and it's sort of, I'd rather see it as corrective, as the A wave, and that really should be in the front there at that point. But it does count down as an ABC here, but what I've been mentioning is that we need to get above that wave B there. It's possible to force 5 waves out of this move here with an ABC pattern here, but we don't want it dropping below this. I mentioned before this one over here, but in this case, because of this ABC, we don't want it being, we don't want that to be breached at that point. So we'll just, as usual, we'll just give it a bit more time, and we'll see if it builds from that point. But just pointing out that the bearish case is probably dominant in this low here for all of this. I mean, besides, even if this was wave 1 up here, this wave 2 here has been too time consuming. It's bigger than the wave to the upside. So we'll see. But below here would take this past the A, the B, and the C at that point. Just take it past it, and then we'd have to look at this as 1 and 2 and 1 and 2, and looking down further at that point, like quite a long way down at that point, unfortunately. Well, that's iron ore. Let's have a look at gold and silver. So just on the weekly chart here, I need to point out that this low here is not the low, that's the low there. This is a CFD product, and you can't really rely on CFD providers because they control the price. And if you read their product disclosure statement, then you'll see that legally they can do what they want with the price. And in this case, they need to make a market. They need to fill orders. They match orders, and then they've got to fill them themselves if they're exposed and not hedged and whatnot. So, but on the COMEX futures and COMEX spot, that's the low there. So So I'm just going to stay with the triangle for a little bit, but I do want to talk about GDX and gold stocks a little bit with all of this as well, but we'll just go through this for the time being. So what we were looking for here was the A wave, the B wave, the C wave, the D wave coming into this space here, and then the E wave coming back down here. But there may be a chance where the market, this moves up through here. It may have a top in here already, maybe one more little high. It may pull back 50 or 60% of that length and then move up from that point. So it could move up a bit earlier than expected, and we'll look at the reasons for that very shortly. But on the daily chart, somewhere here, the 2-day chart, yeah, this is our triangle on the daily chart. So from C here, we'd work the A wave, we'd work the B wave, and we've been working the C wave here. Now the C wave is pretty dodgy, and you could count it any way you want, really. But it is edging higher. It is having a lot of trouble at the 18, the balance line through here. I'm kind of expecting it to make one more little high. It may not be the case, and then we can have a look at wave E here. I mean, the normal thing is for this wave C here to move up and make a high above here. That would be the normal thing, you know, at least hit the trend line over here for that. And then we can look at this taking, well, I can't even take that low, so I'm just going to use this low here and the A wave low top there, and look at the 50-60% retracement level, which would bring us back into this level. So the market could come to this point here for the E wave and then push up at that point. So that's a little bit better, isn't it? That makes that a little bit tighter in there, but it's all good. Just looking at the triangle pattern there, we don't need these guys here for the time being. So looking for another move up, and then the A, the B and the C wave here, and then moving up. So if there's going to be a bullish case to the upside, which we could also view as well, we could look at all of this move up here. We could tighten all this. We could tighten all this up here. We could put the D wave over here, and we could put the E wave over here. So we could do that, but it's pushing it and squashing it in a little bit. So I'm a bit reluctant to do that, but we may have to do that. And if that's the case, then this would give us 1 and 2 at this point. So this move up here, we could also view it as wave 1 here, and then pulling back for wave 2 in here. And the reason for that, we'll have a look at the intraday in a moment, and the reason for that is that, let me find GDX here for a moment. I just need to go, did I put that into, oh, I think I did. So let me just go to, I think I've got it in commodities, haven't I? Just building a new list here. So this is GDX. So without boring you to death, a daily chart, A wave, B wave and C wave here, and then looking at this as wave 1 to the upside here. So it's possible that wave 1 has got a top in play. We could probably put that there. I'm not quite sure, got to pull that apart, but it doesn't really matter. It doesn't matter today, but what we're looking for, that's an impulse wave up here, because I can see it in stock in companies like Newcrest Mining. So what we're looking for is, we're just looking for this wave 2 to pull back. So I've probably done that a bit large there, of course. So we'll just remove that. But really all we're looking for here is a very, look, there may be another little move in here. I'm not quite sure. I haven't pulled it apart, but we're just looking for something like this, and then we'll push up. Okay. So it's possible that spot gold can do the same. So we may have that top in place, or we might need to put it over here. I just don't know, but it doesn't matter. You can see that it hasn't really pulled back down much at this point. But I've been tracking this on, this is Newcrest Mining here. With Newcrest Mining, I can see we've got 1 and 2, 1, 2, 3, 4, 5 for the third wave, fourth wave, 1, 2, 3, 4, 5 here for 1, and back for 2 at this point. So stock has already started doing this move already. We're going to need the B wave there next, but anyway, that doesn't matter. So it's already correcting here for Newcrest, and if I put it on a daily chart, you'll see the same sort of thing here. So it's that move up here that we're looking at, and then pulling back into wave 2 here. So we've kind of maybe already started in this case. And this has been going through a big correction for ages anyway. So I think today we looked at it for the first time on the monthly chart, and I just drew this up quickly looking at it. So wave 1 here and 2 here, 1, 2, 3, 4, 5 for the third wave, A, B, and 1, 2, 3, 4, 5 for the C. So we think that that's the low, and we've got wave 1 to the upside here. So this is what we're looking at here. So yeah, anyway, it's looking good. But that little move up there first on the daily chart is the same as all the other silver stocks and gold stocks from this low here. So if you're looking at gold stocks, as I've mentioned a couple of times now, is that if you're looking at gold stock or silver stocks and you're trying to figure out which one you should be trading, because you don't want to trade too many, do you know what I mean? Because they're all the same. But what you do want to do is find one with the longest range. So this one here's got a nice range here. Some of the gold stocks have just got a little half the way moved up here, for its 5 waves. So you don't want that. You want the ones with the longest range, because they're the leaders, and the leaders have the longest range and the followers have the shortest range. So if you're looking for stocks on the low here, make sure that you've got the ones that have got the longest range coming off them. Okay, that's one way of just really simply choosing all of that. This is the 50-60% retracement level back here for that. We don't need that. So this is GDX. So I haven't really pulled it apart yet, but we've probably got the top in based on what I can see with Newcrest Mining. But when this starts to pull back, I'll be all over it. Don't worry about it. We'll go right down and we'll nail the little sucker and we'll get it right. And but I'm thinking that now that I've shown you this, is that not that I've shown you already knew that, but gold could be doing the same. Now gold's move up is as as dodgy as any criminal, because it's not, it's really sort of spiky, and you could count it any way you want. But the question is do we have wave 1 in the top there, or do we have wave 1 that needs to go over a little bit further and we have another little move up? I'm not quite sure yet, but it doesn't really matter, because when wave 2 comes back, it's going to be obvious. Let's go to the hourly chart now and just squash in here with all of this, so just bear with me a second. So off this low here, we could have the move up here as wave C of D, or we can have it as wave 1 here and back for wave 2. Now wave 2 would pull back a smaller distance, and wave E here, if it was D here and E here, it will come back a bit deeper at that point. So that's one of the things that we need to figure out. I always said that in the triangle pattern, the wave E and wave 2 will be, all of this pattern going to C and D and E here will be much the same as wave 1 and 2 anyway. So wave 2 should be simpler, should be a zigzag, a 5-3-5 structure, and so should this one here as well, but that could also get a bit more complicated as well. So that's where we are. Now the question is how do we count this up through here? I'm thinking that we've got one more little push up here. I know that would be a bit different from gold or the other gold stocks and stuff, but I'm thinking something like this here. That's what I'm thinking. So we'll just keep an eye on all of this, of course. something like that. We could even put that wave E, I'll put it down here a little bit further. So that's where we're at. Another way to look at it is that we just want the 1800 here with a classic trading levels pattern on it. You know, we're still looking for the first high above the level, and then we'll have the ABC correction here. So look, it's been a long haul, but the thing is just hang in there, because once we've cleared this, once we've created the top and we've had the profit taking coming in and people getting pushed out and all the rest of it, then all the weak hands being pushed out, then this move here starts. This is the one that we want. You know, that's going to take a while to build, but that's the money. Show me the money. Well, that's it there. So that's gold. Let's have a quick look at silver. Once again, silver wave 1 could be on the top here, but I'll just stay where I am here. I was looking at this here as an A wave, a B wave, and a C wave. So I'll just wait for a bit. If I see it go down if it rolls over past this 1, 2, 3, 4, 5, if it moves past that, we're looking for that little move down there. But if it moves past that, well then we'll look for the top in. Then we'll look for that wave 1 top in play at that point. Okay. So just giving it a bit of time. You know, we've been building it slowly and talking about it, and we called the low in and looking at it and all those sorts of things. We still need to get that 25 as the support, you know. So the market can still come up to here and make new lows. So we just need to be careful about that. I won't go into that reasoning just yet, but we need to see a classic trading levels pattern at that 25, and it will look like this. That's what we need to see. So currently we could say that we're just at the arrival point here and the reaction here. So with that, we would be arrival and reaction here. So reaction here. So we want to push up here now, you know. And then we got to get this, and we got to get that, and we got to have that, and need that today, and so on. So, but anyway, that's where we are. So, classic trading levels pattern at 25. That's all good. Okay, so we're going to have a look at crude oil at the moment. So, crude. That's not that one. We'll come to copper in a moment. Where's crude? There we go. Sorry about that. So, yeah, we just, from this low here, just counting it up with 1 and 2, and 1 and 2, 1, 2, 3, 4, 5, a third, fourth, 1, 2, 1, 2, 3, 4, 5, a third, fourth, and fifth. So we're getting that turn. We're looking for this wave 4 that's rolling over here quite nicely. We could probably start by looking at the 38.2% retracement level, so that is down to that point and then up at that stage. And then the next job is to track that, which I haven't really done yet, but we'll just take a quick look at that. Oh, we did start it yesterday, so we did call the top in yesterday, and we're looking at that as the B wave. We could go long, we could have gone long above that, because that would have created something past that 3 wave, but we're looking for it to come down. So it's moving along nicely. So everything, I've counted all of that there, obviously. So the thing here though, if I don't mind, let's now we also need to understand too that waveforms can get complicated, so that means that we need to be mindful of that. So we will. What's the best way to approach this? But anyway, this one here would be wave 1 here, and wave 2 then 1, 2, 3, oh no, that would be 1, 2, 3, 4, 5. That's just the third wave to there, which is probably not finished. And then we have that one. So we've got that and that and that. So that would be that. That's one. I should just put them on the highs and lows, then I remember. Otherwise I look back and I go, what's all that about? So 1, 2. Oh no, that looks like 3 in there, doesn't it? 3, 4, 5 there. So we still need a 4. We still can come back up to that wave 4, but I'll just pop it there, and then we still need another one. That would give us, that's 1, 2, 3, 4, 5 to there. That's that one. That's that, and that, and that. I mean, it could finish there. That could be, that could, you know, I mean, just, you know, you're feeling lucky kind of thing. It could be that, but it could be bigger as well. Okay, so because we haven't pulled back enough. Let's not do anything for the time being, okay? Let's just allow this section to unfold down to this 80 here, down to the level, and then we'll take a look at it. But it's bearish, it's doing a correction, we can expect it to move lower. Okay, now copper. I'm gonna change. I'm going to use a different copper chart. The copper chart that this is from the US, this one. So this will be maybe you just have a look at the London copper as well. Just bear with me a second. Metals, the LME copper. Oh, that's what we were looking at before, right? So basically we've been tied up in this little correction here. Trouble is it didn't, this little move here, this is the LME here, but this move here didn't give us 5 waves, so that was a problem. We haven't taken the top out here. So really we've either got an A wave, a B wave, and a C wave back to here, or we've got a triangle. Let me just, and this is US copper here, so it's a different price. The other chart that I was using before was LME. Anyway, I'll just mull it over for a little bit. So this is futures copper here, so from the US. So it's the daily chart. We've got wave 3 here. We're looking for wave 4. I have no problems with 3 and 4. I have no problems with this being a bullish corrective pattern with further upside to go. I have no problems with that. If you're in copper stocks, it does look like that you're going to have to take on a bit of heat by the looks of it. How this is going to play out, I don't know. So it could be a flat correction with 3 waves up here. It's just looking better as a triangle pattern, that's all. But as a flat correction, then we'd be looking for, it's come to the top here, so then we could expect it to come down this, back down to the A wave here, if I can get that roughly straight there. And we could get 5 waves to this point here and then head off at that point. So we've either got one of these two. Because the thing is from this low here, it just doesn't count as 5 waves there. You know, maybe we could look at it as some sort of A, B, C, D, and E wave here. And then look at all of this as wave 1 up there and back, you know. So maybe that's also possible as well. Bit of a long shot, but I'll check on it. That would go there. An A, B, C, D, and E for a triangle. And then what? Then 5 waves up at that point. It's possible at that point. that would leave us with the 61.8% down here, a little bit lower coming in here. So that could finish off nice. Anyway, we'll keep an eye on it. Okay, there's I just need to mull this over a little bit more. Okay, so that's copper, natural gas. So natural gas here. This is running a little bit better. The main point here is that this is the low. We've got wave 1 here with an ABC for wave 2, and it's all pretty simple. Everybody should have the same count there, not 10 different Elliottians with 10 different counts. That should be, all of this should be pretty stock standard with 1 and 2. And top of the third wave here, and looking for the fourth wave here. Will the fourth wave get more complicated, or is it finished? I think it's finished because we're looking pretty good as an impulse wave to the upside here. So an A and a B and a C for wave 4, pulling back to the wave 4 here. Let's just go to the 4-hour chart for a second. That's not going to do good. Go to the hourly chart. I think that well, first of all, while we're here, we've got an A, B, C for the A wave here, then the B wave, and then 5 waves coming down here for the C wave. And then we're looking for this move to the upside here. So anyway, I need to readjust that, but I want to go to the 15-minute chart where we did a little bit of work on this yesterday. So yeah, it's a little bit more. So that's the low there. We've got 1 and 2 here. Pop that in there, and then 1 and 2 and 1 and 2 here. We've got 1, 2, 3, 4, 5 for the third wave, fourth wave, and the fifth wave. So yeah, so we're going to see a little dance probably back below the $6, but I'm not quite sure. This is a little bit dodgy here. I mean, I've just counted up as 1 and 2 and 3 here, but yeah, it's not quite right. I'm not going to worry about it. What we're looking for in the bigger picture, yes, there will be, there was resistance at the $6 mark, and it's reacted, and now it's finding support on that. It may come back and test it, but it's really all about this level here. So we want a classic trading levels pattern on this level, and it'll just take time to do that. It'll just be, the normal sort of thing here, like this, bit time consuming. Probably come back and check support, and then head off at that point. So that's it, really. So gas stocks and whatnot, all good at that point. And we'll have a look at the US dollar index. So with the US dollar index here, we're still in our corrective pattern to the upside, but we are looking for a top, and it's possible to have a top here, but I don't think so. If those lows there get breached to the downside, then we'll call the top in, but otherwise we're going to expect at least 2 more little humps to the upside up into 95. It's that simple, really. I'll go from the daily into the 15-minute chart just to pick up that low there, or was it the hourly chart we were looking at? Sorry, the hourly chart. So yeah, we played around the bottom here. I mean, it's not confirming that it's we're bullish just yet for all of this, but this current low, we need to keep that in play. That needs to stay there for this market to push higher. Okay, so we're just waiting to see here. It looks a bit impulsive here. It looks like a little 1 and 2 here, and 3, ABC for 4 and up for 5 with a little A and a B and a C. If you wanted to go long, you could go long above that little top there if you wanted to. But I just want to put that back there because that's important. So we'll see how that goes, but that could be part of this here as an A and a B and a C wave here, and then just drop down here as well. But taking that top out there would be a long trade if you're going to trade that. So as you know, we've been waiting very patiently for this to land. So it's done that. We've got a nice low here now to work from. Let's see if we do push up from this point, and if we do, then it will just be from here it will be 1 and 2, and normally 3 goes into the previous highs over here somewhere, and 4 and 5 to 95. That would be the run there. So quite a nice run. You could probably get in a little bit earlier than that. Alrighty, I'll leave it all at that. Thanks for tuning in. Cheers.